Welcome, everybody. How are you? Not even too sure how many of that are out there, but welcome. And let me know where you're checking in from and what you're doing up at this hour. In fact, 11:12. Yeah, it's not that bad. Let us know where you're checking in from. So USD Korean won. Right here, right now, the Korean won has triggered. It has gone up through a key relative high 3-point as per HVF method, and this has now increased the probability and the likelihood of an outlier capitulation in the one that will see it fall through the 2.7s, even 2.8s range, just for everybody's understanding, because this is not a pair that actually is very meaningful to many people. You're at 1.453 now. The triggering event was at 1.4580, so at 45.80, so it's 1.44580, you triggered. And let's be clear on this, a pattern that commenced since ages ago, so long ago. It was the Asian crisis that started in 96, 94, 96, that pumped all the way to super extreme currency highs for the Korean won, and then it fell all the way back. That is our high one. The events from the Asian crisis, 94, all the way through to 2024, a 30-year setup pattern that includes the original up leg for the Asian crisis, the subsequent decade that brought it all the way down to a new low at 2008 from the Asian crisis. Then the GFC crisis took over. It got pretty high again, but not as far. And then it came all the way down again in 2014-15 before the Shanghai Accord saw it pop up. That was the Chinese debt situation post it doing its own version of a subprime property debt gig. Anyway, so this structure is huge. By the way, this chart looks very similar to the XRP chart, which had a small pre-fractal that pumped for the Asian crisis and then a much longer one. Only by scale, this is far more vast. You're talking about a potential structure and setup that is 30 years in the making. Man, oh man, that first Asian crisis, I wore a younger man's clothes. No bunny t-shirts for me there, I tell you what. Anyway, so the key part about this is that this is going to probably be bank, debt-based, currency-based, possibly their weird rental system. They have a very unique financing system and rental system in South Korea. And this is going to lead to contagion in the currency and possibly have knock-on or spill-on effects to other Asian currencies. This is a huge event. It happened tonight. Further to which, if you're following our X profile, you would have noticed there was a small upside HVF fractal that overperformed to its target and ended up triggering this bigger event. So we see 2,740 failing. Some of you might say, so what, I can't trade it. Actually, IG is offering USD Korean won. So if you open an IG account, you'll be able to trade that. It is currently, it's not a recommendation. It's not advice, of course. I'm a YouTuber talking about what I am doing. It is never to be construed as an instruction to be what you should do. However, we're making a call and we make it publicly so that it's dated. So we covered this trade. We've been covering this trade actually for the last decade, and at least 3 or 4 times in the past history when it's had initial runs that have been brought back. This is the big one now. There is no more room for maneuver. Now, small point of warning, when you have a triggering event of a major structure, often you trigger it, you get scared, and you have a revisit into the funnel. That can happen. It doesn't have to happen. You can rip straight away, just get into rip mode, but it can happen. So 2,740, which will probably lead to 2.8 and even bigger blow-off. So the target last time, by the way, when it was 783 Korean won in the mid-90s, was in fact 1,054. So it was kind of like a 50% move. It went all the way to 1,860. So it went almost 3x. That's what happens in terms of overperformance when things get weird in a currency like this. And that's rocked the crypto markets a little bit. It's rocked other markets. They've had a little bit of a down to the downside. And, it still homes a number of very prominent companies such as Samsung, Korea, Hyundai, and others that you may be familiar with. And those, it's a first world country, South Korea. We're not talking about Guinea-Bissau here. And it's smart people as well, but with the same parasitic elements. They've had that little martial law bump. That was something was going on somewhere. There's stress of some political nature and all of that, right the way through into what we're getting now, which I think is going to roll into a larger contagion. So your comments. Elon Musk should announce he will run for governor of California in 2026 to just spark fear. Yep, that's something that'll get all the LGBT feminine men freaking out that tend to have big hair and run for California head. Hello, good evening, Francis. Howdy, Sniper from the Midlands of Ireland. God bless the Irish. God bless the Irish. The Irish had Chosen One's embassy closed because they decided they didn't like the colonialism and the pipeline of immigration and who was behind it. So not only did they take some action and make it uncomfortable, they actually said enough is enough, and they started to turn the heat up. And guess what? Oh, that was deemed deeply anti-Semitic, wanting to rule your own country and live in your own country. Well done, the Irish. You've been calling this trade publicly for a while. Yes, we have. And we were early, which is wrong, a few times, and we've eaten red on that as well a couple of times. So this will be the third entry on this particular one. I guesstimated, without knowing exactly, that I've thrown 100,000 euros at this trade with various false starts. So I think it's 3 full occasions. But this is the first time that it's a full qualifier to the highest standard, and it is my highest confidence that this one is significant. The others I was forced to take on the basis of what if it just started ripping, and then I would fear being left out. So it was the cost of being left out that I wasn't prepared to sit with. So I put deep stops and multiple entries, and on 3, I think, is this the third or the fourth? The third occasion, I think it is, that I'm longing this on this particular setup. But each time it's got better. And this is it. I would say this is it. I won't take it again if this doesn't succeed. So there's a stake in the ground there on that one as well. So I'm pretty about as confident as you can be on this particular pair being ready to move. But that still doesn't mean you should bet your house and do anything silly. Own your own outcomes. I usually don't do t-shirt vids, but it's 11 at night and I'm not rushing off to go get a collared shirt. I'm going to go to bed. I was up at 4 this morning, greeting the sun and swimming in the beautiful water and getting the light into my eyes without the blue light blockers, you see, and getting the... It's all very good for you. It's good for... And then I had a nice cold water plunge on the other side. Did 45 minutes catching waves in the seaweed on, if you know South Africa, the Atlantic side is the cold side because it comes up from the South Pole, the Antarctic, essentially, which we are not as far away from as many people imagine. We're often a staging post for people going to Antarctic when you're in the Cape. Yes, so the wonton soup, says somebody. I do fear, now look, there are a lot of Koreans are nice people. I'm not taking bliss out of the suffrage that devaluation will bring to any nation. But I am telling you that there's monkey business in your government. There's monkey business probably in the debt system, the banking system, and many other things. And a combination of geopolitical events and or financial are going to lead to some narrative that you will hear. This is the news before the news. I wanted to get out and do this the night it happened which is, as I say, I'm coming at you just before falling over into deep sleep. And I want it dated today because I sat and watched that happen, and I watched for the first time the key alert run. And we had this beautiful little fractal in there, and I might do another YouTube just showing those charts and doing a screen share. But I thought, let's go live. There's some community members in the house. Great to see them. We, of course, been talking about this a lot, and I was talking about it throughout the day. And I said, one of two things is going to happen. This little wind up is going to just make its little target and quickly stop going up and roll, or it's going to have quite a bit of momentum, finish its target, and actually breach the big boy. And the big boy has been breached. And that technically means for us that you go from a certain level of possibility to much higher probabilities of this outcome coming. So you will get headlines in the future that will explain the reasons why what's actually happening now is happening. And it'll probably be a misdirect or some bad summary thrown together by some journalist, which they'll allocate the blame to some politician that they were waiting to hang out to dry. But you can know for sure that the same parasites are surrounding their key players and have been doing irresponsible, usury, mercantilist things designed to crash their economy and their currency. And this just happens to be their turn. And as I say, we don't take glee in it, but make the money, make the profits if you are so inclined, so that you yourself will be in a better position, because it's not going to stop it from happening anyway. So the kimchi crash, we're calling it. Yes, indeed, low blood pressure. We have called it that. Ire Midlands, Tullamore. Ireland, home of the free. Yes, good for you. Buy silver, platinum, and crystallized osmium. Interesting. No idea what that is. Can you smoke it? Sounds interesting. Anyway, so key point about this is it's a massive move on a first world country. It could have some military element on it, but I think it's more financial, fiscal, political. But it could have a NK SK type vibe on it as well, that would attack the currency. But it would probably mean that need to be compromised in some way quite badly and be in a poor situation. Just an escalation of hostilities, halving of the currency. That's a tough call. I don't know if that's enough. It could be, and it's a good question. Intense Gamer asks, could this be the DDE? Well, the interesting thing is, I had a setup on a particular crypto that I won't say, but it was looking really good. It was going into the green, and it started to reverse. And we had already said, could there be a right shoulder on the small time frame on Bitcoin? In other words, a little bit of a reversal on head and shoulder thing. Shared that also on X. Follow us, the Crypto Sniper, the Market Sniper, if you would like to see those charts. And that has triggered. And I'll just check again while I'm speaking to you whether that it's not yet made its full target, but the full target is 98,000. Don't forget you were trading at 108. So that would represent a 10K drawdown, which is fairly substantial given what's been going on recently, where you've been grinding fairly stably ever higher with sort of $2,000, $3,000 pullback. So a 10 grand is a little more. That's if assuming you run the target, for which you often can overrun the target as well. So 108 down to 98. So that's a Bitcoin dip. So that's going to affect crypto. I haven't checked if there's been any effects on the stinky stock market, the stoinks, and I haven't checked if it's had any effect on gold. So I'm going to do that right now. Just to see if gold has gone up or down. I wouldn't know which one to guess, possibly down on fear initially. There is a little bit of a sell-off on gold. It's at 2588, having hit the high of around 28, almost 28. It was 2790. So we're at about 25. 87. So yeah, we've lost about a couple hundred there, and it's selling off. We'll see if that accelerates or whether it'll just visit the bottom end of a trending channel. So next time I do a gold or silver update, I'll be showing you that channel, and you'll see it on a bigger time frame. But if it goes a little bit further and further down, it could actually get to a point where it's meeting the bottom end of a angled upwards channel. Since it broke out of the broadening structure, which you'll remember us making a bit of a fuss about. So gold is selling off. Dollar would have got bid. It's curious to see if the Korean won is softening against something like the euro. I'm going to do a euro Korean won just to see. So some of the cryptos are rebounding, so it's I think they think, oh, this is a little bit of something, but won't go too far. I do fear that this will go quite a lot further, actually, and I do see the probabilities being quite high of that halvening event, and it could be, as it has been before, pretty melt-uppy, so strong straight lines. That said, it doesn't always have to repeat. So the Asian crisis was boom, and then you had 3, 4, 5 months with just currencies falling through their pants, right through the hole. So the Euro Korean one is also near its high, but it's been the dollar that has actually been the main driver. So the dollar is getting bid, as well as the one being sold off. So the Korean is losing ground to the dollar mainly, but also a bit, and the dollar is surging forward and up. We're now at 108 on the Dixie. So that's also going to lean into gold a little bit and push him back. It's going to lean into crypto a bit. If there's no major strong drivers, then it's a bit of a headwind. And we have to check. So this could actually be a US debt issue as much as it's Korean. So I think there's something going on in Korea, but it's also dollar strength. It's Korean weakness, but there is an element of dollar strength. So I want to pull in that US 10-year as well, because the Dixie is up fairly abruptly as well. So we're seeing the dollar is being dominant. What's going on that 10-year? It's broken out to the upside. Wow. A falling wedge. So this goes beyond just being a Korean issue. This is now, we thought we'd get a full falling wedge. The second, it pulled back after hitting our capping descending grind line, and now it's actually broken. Rates are climbing. So I did a video with a bit of diagrams and images literally tonight. I think it was. Did it get released tonight? I think it got released tonight. That is saying it's the debt, stupid. It's the debt. And in actual fact, I'm looking at Korea and the Korean won. It's the debt market of America. It's collapsing, guys. Guess why? Because you're talking about a new reserve asset as Bitcoin, and you've got a politician that says he's going to start a reserve for it. And that means the old reserve asset, debt portfolio, is no longer cool. And we know that because it collapsed 45% from 2020. And the real legacy, mega old, that never really went out of fashion and never was truly in fashion, gold, has been climbing. So people are looking for a new reserve asset. That's what we said in that video. We showed a massive Jupiter of fiat currencies and debt that all needs to contract in. And the way that happens is a rate spike. The pullbacks will be less and the climbs harsher and sooner and earlier and for longer. And that's exactly what's happening. If you guys have your own devices in front of you, I encourage you to, double check me on all this. Look at the US 10-year, see if you can draw that falling wedge that you've seen me draw. The time frames you'd be looking at this is roughly let me just see, what am I on? Am I on a weekly or you can do a daily chart. You might need to do 2 daily, but we are broken out. If you draw the capping descending grind line through the last 3 localized highs, you will see that the current rates is breaking through that. And this is the disorderly devaluation of the long-term debt. Why? Because you've got a country and a government that are issuing too much of it at too fast a rate, and that means it's got to get devalued. Proliferation is devaluation. Scarcity is value. Anything that is unique and scarce has value. Anything that's deeply proliferated and available everywhere is not high value. You don't pay a lot for lawn and grass. You can go and walk in it, smoke it, do whatever you want. Oxygen as well, there's plenty of it about. But silver and gold, well, it takes a whole bunch of effort to get very small bits of it. And that's why it's going to highlight the inflation. This should, in due course, actually start to push silver and gold, but initially it's pushed the dollar. So the debt climb is actually a US debt climb that has it's actually jumped the shark here. It was supposed to have a deeper pullback and pull into our wedge a little longer. It's just jumped the shark. It's gone straight back up to the capping descending grind line that we did in red. Can't share this with you on live streams, unfortunately, from the laptop. But go and have a look at that US 10-year. It has just taken out the last localized high and is trading 4.522. So well through 4.5. We've said it's going to run and take the 5% again and go higher than the previous time. This is going to surge the interest rate payments of government on their own debt, which is basically you being diluted, because they'll print those dollars so that they can pay the banking families that are the owners of the people given the license to create money when the government could have done it of its own accord. The exorbitant privilege to the mercantilist parasitic element that have coerced and bought politicians off to give them the license of creating money. The banker cartel has, in actual fact, going to get absolute unbelievable interest payments, and it's going to come at your cost. And that's going to lead to more proliferation to be able to meet those interest payments, less ability and less budget to fund the military industrial complex, the pharmaceutical industrial complex, and useful things like your roads, repairs, and everything else. So you are going to see stagnation in the state of America, all states. There's going to be less money for general services. There's going to be less money for welfare, Medicaid, and all of these things. Those services will be reduced, shortcut, criteria to qualify made higher, people excluded, and a lot of assisted dying, I imagine. That's a kind of solution, isn't it? A little bit of assisted dying. Come and have a little bit of a, and we'll cap you off and no worries. And then we'll have a little bit of assisted dying where you can say goodbye. I mean, don't be selfish. You've had a decent innings. That's what they've been talking about recently. How nice, how sweet. Yeah, so that's a couple of things coming away as a result of this escalation in interest rates, which has been our primary prediction. To roll into an interest rate spike, we might begin to be seeing this. Don't forget, this could all be the precursor of a major escalation, just as Trump has handed the reins. Here, you fly the 747 that we've now got at a vertical dive, doing 900 kilometers straight down into the base of a mountain. Now save us. You're the greatest pilot in the world. Good luck. So I think they're going to hand that over because they love to crash things on the center right part of their control structure, all of whom are controlled and none of whom are your friends, but made to look the less loathsome and less prone to be tinkering with kids as a politician while in a demented state. So that's what we've got. It's actually it's a Korean won problem. So they're one of those that are creaking under the dollar strength most at the moment, and it has triggered a huge move, which is likely to lead into some Korea-specific drivers. But we can't hide the fact that there is a US debt breakout making new interest rate highs, and that is driving the dollar. So somebody's driving the dollar up, and it's causing pressure on certain nations, and we're seeing some of them crack, and the Korean won is one of those that is cracking. And it's in such a structural setup that it's going to crack badly. In other words, it was one of the weaker of the first world currencies and was walking the edge of the cliff and just needed that elbow nudge into the small of the back there. There you go. Have yourself a little swallow dive, me old buddy. There you go. Go head first. You never know. You might make it. Don't bounce off any rocks on the way down. And that's kind of, unfortunately, what's I suspect is going to happen to the Korean currency. So it's going to escalate and it's going to get big. So we are long. We are long dollars against the one. Long dollars against the one. Triggering event brought to you, the maestro of HVF Method, the founder and originator. On the day it happened, you didn't get the heads up throughout the day. The fact that I've actually been in this trade for 10 days now and adding size all this time. So it's been nice. It's walked me into profit quite consistently, because we also had a small fractal that was forming and we were accumulating it before even that formed. But that just accelerated it, because we look for small setups inside the larger setups that give you incredibly tight risk reward. All my stops are on that tiny fractal, not on the massive fat funnel of this multi-month, which runs into 30-decade long, 3-decade long pattern. So that's how you multiply your way to wealth. You trade smaller patterns as initiating primer events into the bigger cannon shot. So that you can have the huge reward of the macro pattern with the risk of the small pattern. Do you see that? If you understand the principles of what I've just relayed to you, you now understand the benefit of asymmetric reward to the upside with super, super tight and restricted risk to the downside. That is what gives you massive R's in the RRR. And our methodology is 100% known risk-reward ratio before you even get taken in on the traditional entry. So you know the juice is worth the squeeze. You're not risking 1 to make 0.65. And this is a huge R's. This is without overperformance. And it's also by duration the longest and biggest HVF in my entire career of trading. I've been doing this for an extended period. I've been developing HVF method since the 90s, had it pretty tightly refined by the time we were through the noughties, and we're teaching courses on it from 07, 08, 09 commencement, and we began the YouTube channel in 09. So this is the biggest. It means something because I've been doing this for a long time. It is the biggest I will have participated in. And you're going to have the combination, the giddy cocktail of pumping US interest rates. And there may be some fancy derivatives, some sexy options and swaps that the Koreans are sitting on that are going to see them be absolutely mullered by the fact that these rates are continuing upside. And may indeed see them have to proliferate their currency to meet margin calls, to hold positions, and that could see the beginning of the collapse, because we are already seeing that against the dollar particularly, the Korean won is collapsing, but it is weak against the other crosses, but not as runaway. So there is a dollar strength element into this, as well as a Korean won weakness. It's not completely on the one side. And there is a US debt failure, which is why I say it's the debt stupid. When everybody asks me for a fundamental opinion on why XYZ, the first thing I will say, maybe without the stupid, because that sounds kind of insulting, it's the debt. It's the debt situation and environment setup. That was a play on Bill Clinton's history of saying it's the economy stupid, and that's the only reason why we put the stupid in, not because we're smarter than other people and everyone else is stupid, but it just was one of those suchy and suchy marketing lines that saw him throw George Bush Sr. out and take over the presidency because he understood the economy. No, I don't think. I think that's a very sweet take for our friend Bill Slick Willie Clinton. But never mind. We don't want to get talking about that family now, do we? Anyway, so debt is in, surprising even me, the guy who's calling for less pullbacks, shorter pullbacks, longer moves to the upside, is surprising me, actually, that second visit to the capping descending grind line that started to look like would fail and roll over as well as just a sort of double mini retest is actually throwing it through. Don't forget, they're going to be announcing a cut. And in this environment where they are announcing cuts, the debt market is going up, and it's going up because it's collapsing. It needs to lose value. The seesaw, rates up, collapsing value. People don't want to hold it. They know it. That's why they're rushing with new reserves. Trump doesn't know that or understand it. He's just told what to say. But he's now talking about Bitcoin as a reserve asset because they don't want you all running into gold. You see, there's no marketing board for gold. There's just independent people that kind of like sound money and hate the inflationist pigs. But there sure is for Bitcoin. There sure is for Bitcoin. I wonder why. Oh, no, it's your freedom. It's libertarian. It's totally not private. Despite all that freedom and liberty talk, it's your online banking that everyone else can see. Okay, so surveillance finance then. Anyway, so that is the news flash that I wanted to give you. Let's see what you guys are saying. Is BTC done dumping? No, it's got a lower target to make. I mentioned the target was 98. It has fallen. I don't think it's even through 100K yet. It's getting a bit of support at 101. It hasn't broken 100K. The target is 98.8. So I suspect it will trade the target because it's had a good spill and it triggered nicely. So have a look at that head and shoulder. I shared it under the Market Sniper X. Also then go draw it on your own chart and you'll see what I'm saying. So this is sort of bumping into the top end of the range, rolled over the head, bounced on our neckline, by the way, 103.5, exactly key level of significance, round number, 100% horizontal, a price point, a price level, not some slopey slanting up, down grind line. Okay, so forget how traditional technical analysis gives you that flexibility. Proper head and shoulders have key levels of significance, which are price levels. Okay, so what else were you asking questions? I saw the Liverpool is winning. Good. Unfortunately, I saw the Arsenal was winning too. We got an Arsenal power. Where's Ollie? Also the Gooner. They came back from 1-0 down. Anyway, thanks for the sports update. I'm not sure everybody else loves that. There's no privacy crypto. No, you'd have to start talking about XMR and the others, and we don't know if they've been captured. 310 million liquidated from the cryptocurrency market and over 1.5 trillion. So here's the value about us. I closed all my leverage as soon as I saw the Korean won triggering. And sure as hell, I was closing into the market starting to slip, and then it slipped further. And I had a couple of leverage longs in there, one or two things that were setting up. And I knew the one setup that I was looking at that was going to potentially do really well was not going to happen anymore, because this is a macro event. It's kind of, you don't know the name of it yet, and it may be a small one. It might be all over in a day or two, and it just comes off. Bitcoin just trades 98 and has a start, snap back, and everybody chills. But if at some point this currency is going to fall badly, and we've seen how it fell when it triggered, and it's driven by dollar strength, Korean won weakness, and that is driven by higher up at the top rung, the debt, stupid, the failure of debt to actually go down in yield and up in value. So Powell is cutting rates, saying, please value my bonds a little more, we're going to pay you less yield, and the market's going, we want more yield and we're going to pay less, because you are churning out, the pink crog machine is being left on 24/7 and is spitting out, transgender flipping rubber at such a rapid rate that you've got the container ships lining up and they're getting stuck in the Suez Canal. They're so fat and pink. And there's just not the amount of people that want to buy that garbage anymore. And that's pretty much how my take on debt, that's my go-to parallelogram of metaphor. It's nothing unique. It's greatly overstocked. It is losing value by its yield against a true inflation. There's too much of it. It's stifling normal movement and financial markets. It's stifling budgets through the interest payments. It is actually choking everything in the room. It's like this parasitic lily that grows on dams and just stops water sports. It's just crowding out every single thing. You can't even go to the bathroom, and you've got pink Crocs piled behind the shower door to the ceiling. You open the door and it just rains down on you, and you've got 9 pairs on, and there's one around your neck and everything, and it's just opening cupboards and they're just bursting out. It's an absolute overrun of an asset class that is still ridiculously hypervalued for its proliferation, and that is correcting because the system says no. And it took a while for the people to say, we need to think about this asset class a little differently. You know, the whole 60-40 portfolio, it is also binary, a super hypervalued stock market and a little bit more stability in a debt market. That model don't work no more. What happened to when you used to hold 20% gold? Well, you kind of said, we don't need this shit anymore. Well, now you do. Now you need more. In actual fact, you need a whole bunch more to compensate for how much you've lost in that crap 40-year product that no longer can serve as a reserve asset. It's starting too high in value. It's paying too low a yield in a very high inflation environment. It has to crash first. It has to crash till it's paying 20, 25% and is dirt cheap. Then some people will take it for income again. If inflation at the official number is 5 and probably at about 13 or 14 in truth, then you'll get some buyers again for the bond market at a whole bunch cheaper. So there you go. Did you know that Ireland holds a huge pile of USTs? I'm afraid too many countries do, like 1/3 of what Britain does. Yeah, and I'm afraid, and I mean, Tether USDT pivoted, as I mentioned, and suddenly they were left alone after they did that. You know, once you become, they're the 18th biggest buyer. London, Benelux, Cayman Islands, all these little offshoots of control that are largely proxies of self-consumption and monetization. In other words, hey, nobody wants to buy our stuff. Oh, quick, let's open a private trust foundation in some shady offshore center and start sending some filthy money over there for all the organ trafficking we're doing, along with our mates in Tel Aviv in the war in Ukraine, selling Russian and Ukrainian young men's kidneys and hearts and livers. Let's see if we can put a bid under the bond market. You know, these people are pigs. They're atrocious, cheating, treacherous, lying, deceiving, extracting pigs. That's how they exert their control over you. There is no morality between them. When you find out, when the curtains fully pull back and you find out the extent of skullduggery that has gone on and is going on by these legacy families through their handlers and through the politicians they put in charge, what they're hiding. I mean, you just have to look at, 75 years before you actually get to the freedom of information on the events of CV19 and these pharmaceutical companies. We already know they lied, they cheated, and they knew they were going to grossly terminate people. And that's pretty much how it is. And could HSBC specifically be affected? Well, Hong Kong Singapore Banking Corporation is not Seoul. It's Hong Kong and Singapore, but it's a regional big player in that Southeast Asian zone. So my answer is not specifically no, but there's probably HSBC branches and banks in Korea. I've never been, so I can't say for sure, but there probably would be. I don't know who's the dominant bank in South Korea, actually. It's probably a question for Grok. I did actually ask a couple of questions of Grok before starting the live stream, just to check my facts on that. So I asked any recent South Korean interest rate announcements, because I thought I heard that they were cutting and they just made an announcement, and I wanted to verify that. And you bet your little noggin they did exactly that. The Bank of Korea recently made a significant announcement regarding its benchmark interest rate on November 28, not so far away, about 22 days ago, when it decided to cut the rate by 25 basis points, reducing it from 325 to 3. So what does that do for your currency when you're trying to upvalue your debt? Debt up, rates down, currency down. And now you've got a runner on the dollar because the rates are actually going up despite the Fed cutting. So forget the Fed. It's what's happening in the markets, the US 10-year benchmark. So what you're actually starting to have is a divergence. So Powell's going to have to say, this is the most hawkish cut I've ever made, and make it sound like he's, and that's going to be it, and we are watching inflation. Otherwise, he's going to look stupid. Because if he says, no, there's 2 or 3 more coming, well, somebody's disagreeing and saying they ain't bidding for his debt at those prices. They want a higher yield. That means they're going to pay less until we keep dropping how much they're bidding until they're getting the yield they want. So there was a cut very recently, 20 days, that seems to be badly advised. This was an unexpected move, as most analysts had anticipated the rates would remain unchanged. This cut marks the second consecutive rate reduction as the central bank aims to address economic growth. So they're concerned about economic growth. Of course, China's concerned about economic growth. I highlighted China's debt. So small sidebar, this is an Asian crisis. So maybe the whole Trump thing and the tariff story, it'll look like he's getting an early victory. The Chinese 10-year yield is collapsing down and is getting upvalued because there's fear in their stock market and their property market, and it's washing back into the debt market and their yield is going down. So China is struggling a bit. But remember, China is an export nation that sells stuff to the rest of the world. So if they're struggling, that means rest of the world is not buying as much stuff, which means rest of the world is probably not nearly as strong. So people that just like to think nationally and siloize China, China is collapsing, isn't that lovely, Mate, everybody who's buying items at Walmart and other places, they clearly don't need as much stuff and aren't putting big orders in anymore. If there were big, fat orders for items in what is the workshop of the world, all the carbon creation is out there, by the way. All Europe has done is moved the carbon creation to one nation as their workshop in America. And they've stopped making the sweaty stuff. And then they say, we're clean, we're good, no carbon here. But you buy everything from a nation that is creating a ton of it, and you throw it away after a year and you buy a new one. Okay, so all the hypocrisy, the usual stories, you and I know that. The whole climate thing is a scam. But that said, China's in stress, representing, as we have said, the rest of the world generally, and growth is in a more stressed position than you realize. Of course, you met the criteria for a recession 2 years ago. And for some reason it wasn't, because awesome labor stats. Only a year later we found out they weren't awesome labor stats. So, I mean, liars are going to lie, and we're going to sit here, keep calling them liars. And we've been pretty good at smelling the BS and saying, big turdy bums over there, mind where you put your foot down. There's landmines everywhere when these guys open their mouths. So that's the recent Korea interest rate announcement. They went the wrong way. This could be a Liz Truss moment. Watch, everyone's going to start talking about Korea has a Liz Truss moment, because Liz Truss, of course, went for a stimulus budget, which was going to give tax cuts and was going to stimulate growth and not raise tax. And they said, well, we're too indebted, we can't do that. And that led to a pound crisis. Currency weakens. This is what we are commenting on in the Korean won, and a pensions crisis and the debt markets. So it always comes down to the debt. Too much debt. Too many pink crogs. Yeah, transgender pink crogs everywhere you look. Just numbskulls, wearing them around their necks, on their feet, everywhere, opening their cupboards, tumbling out, bouncy, cheap printed rubber. That's your debt market. It's literally valueless. You can't give that stuff away. In truth, it's a debt-based crisis. It's a globally synchronized debt-based crisis. And a currency crisis goes hand in hand with a debt crisis, a la the Liz Truss reference I made, where the pensions couldn't make their payments. They tried to sell their debt, and no one would buy, so that they could pay people who they owed pensions. They say, who don't sell? You'll crash the market. There's no one who wants to buy at this price. We're just keeping it here. A nice steamy mark to market. We'll let you borrow against it, raise more debt, for example, and then you can pay your pensions and you can put that as collateral. Don't try sell. Don't try test the liquidity. We're saying it's worth up here. If someone actually really tests that and puts a big stuff off order to sell at that level, well, it's going to go real quiet and it's going to stand there for a long, long time, and the bid's going to stay safely away. By the way, on that Korean one, I've watched the spread on the IG stretch, and it was literally 1, then it went to 2, and last time I looked, it was at 5. So let me just have a look what it is. We're getting a little bit of a pullback now. It is 1450, and then it's 1453. That sounds like 3, but in actual fact, it's 37 to 93. So it's about 3.6. Yeah, 3.5 spread. So it actually had gone up to 5. It's down again to 3.5, pulling back a little bit. A lot of late people wading in maybe. And as a result, we're going to get, and this is what I was warning, the macro triggers with a run through the 45.80, 1445.8, and then you get your first pullback back in. But once that pattern is triggered, doesn't matter if you come back into the funnel, boom, bosh, bosh, longer run, you will be reasserting to the upside. So use any pullbacks as an opportunity to load up. He said to himself and to nobody else, because he cannot give advice, but that is what he may do. And that's it. So I'm tired and the eyes are hanging heavier, guys. Let's have a look if there's any other questions I can help you with. Carbon, not pollution. Indeed, carbon is useful. Gregory Manorino sold his equities. Yeah, so I climbed out of quite a bit of my crypto, certainly leverage trades, and I even sold up some holdings just to be, in case this escalates. We'll see if this is a day scare or a 2-day scare, or whether it goes just quiet for a while and then flares up again and gets really ugly. Natural gas could defy any sell-off. I think it does want to turn. I haven't looked at the chart in a while, but it was looking like it was going to turn last time I did. Natty, let's have a look. Yeah, natural gas, capital.com. Let's have a look. Yeah, I think it's winding up. The thing is, if we get a real hard sell-off, I think you can still visit down, but it's sitting on the neckline, which is 3. And that's a neckline for an inverted head and shoulders. And that target is 5.6. So as long as it stays above 3, could be doing just fine. But if this escalated into something really ugly, it could let go of the 3 for a while. So yeah, dollar strength, and it's a cranky strength. It's not a good strength. Oh, the economy is awesome. It's no, our debt market's collapsing. That's why our money's going up, because our rates are spiking. And everybody's going to say, hey, you can earn X% in America, and we are sitting earning 0.3% in Japan. Well, let's dump our yen and move it into dollars. So everyone buys the dollars for the yield, but you don't want to do that personally, because the debt will go lower still and the rates are going to go higher still. So you'll end up start taking the capital losses of the debt devaluing. So we are in a debt devaluation cycle. That is the driver of everything. That's why I say it's the debt stupid. It is the driver of currencies. It's the driver of interest rates. It's the driver of why they want a sudden strategic holding of Bitcoin as a reserve asset, because debt is ceasing to be a reserve asset. They need a replacement. They don't want everybody going into gold, and all of these things. Yes, smash the like button. Smash the like button. Thanks for reminding me. Don't forget to subscribe. Hit the bell, because a lot of you have been unsubscribed, by the way, and you aren't being told always when these things are happening. Gold should be a safe haven. Thanks, Sean, for the reminder. Donnelly. Tom Miller, preparation in for the flares. Hello, says, hey, looking larger picture. This is another sign of all fiats failing. And of course, it's a good point. So I want to highlight, whilst the interest rates relative to other fiats are like this, the dollar goes up against other fiats. The whole fiat category, as debt generally is failing downwards, is going down. So you're in an elevator with 9 other guys, the Frenchman, the Japanese guy, the South American, let's say Brazil, the Canadian with the loonie, the British with the pound, and Europeans with the euro. And you can all jump around in the lift, but the cable snapped and it's going down. So as an American, you don't get too proud because you're jumped and your head is hitting the roof of the lift while some of the guys are still lying on the floor. And you say, look how much bigger or taller I am than them, whilst the entire lift is snapped and is going down. So the currency's buying power, as is evidenced by the global inflation that has occurred, is showing that everybody's money is buying less. So where you are in the lift is actually just a relative valuation for who currently is least ugly. But what it means is the debt in America is devaluing hardest. So the worst bonds to be holding, if the currency is going up because the rates are going higher, is actually the American debt. That's my big issue with the guys that get so aggressive about how strong the dollar is and how nationalistically proud. I'm saying, so you're bragging about the fact that your debt valuations are collapsing faster than anyone else in the world, because that's the effect of the rate increases being the reason why your currency is going up more. You're paying higher interest on your currency than anyone else. So obviously you get inflows. So debt devaluation. Gold, silver, junior miners will eventually turn, indeed, I would say, Mr. Russell Bishop. So there's a peg on the Hong Kong dollar. And we did talk of this before. Often when I was in and around the Korean won, we should have a look at that. Geez, the debt's gone higher. Has it? 4.52. This 10-year. So other key points is we've spoken of the yield curves. They're just about all reverted now. All of them, even the most obscure ones. And you've got the yield climbing now on the 10-year. I actually want to see what the 10-year minus the 3-month is. I think their favorite is US 2-month, but let's just go. O2, maybe I need to go O2. Let's do that. Monthly yield. So if I take the 10 minus the 2, yeah, that's just such a reversion. That is huge. It's gone positive. Regular. So literally the last 3 days, the 10 minus the 2 has gone positive as well. The 10-year yield minus the 2-month yield, not the 2-year. So that's with a short-term note versus a longer term. And so, I mean, I don't know one that hasn't reverted positive. And these are all technical triggering events of the demand destroying event, the DDE, which we've said. We love a pair of double Ds. We'll provide the E. Oh dear. It's getting late at night, I can tell. The testosterone's still running high in the veins there. So, yeah. Yeah, I think it could be. It could be, and it could be timed pretty well for Donald to get the keys to the kingdom and get the fertilizer dumped on his head. Head and shoulders on silver. Nothing wrong with purchasing a kilo of silver and half an ounce of gold. Too far gone. You won't be too far gone. Triple D's, yeah. Good. Yeah, that's the big news, guys. Debt market collapsing in America. Long-term debt market collapsing in America. All forms of yield curves have reverted largely. I can't find one that hasn't, that are all now positive. And certain other international nations now being badly affected by this dollar strength, going into a weakness spiral of their own. Ergo, Korea is the one, particularly. I'm going to have a peek at the USD JPY. Let's have a look at the USD before we finish. So Korean won has triggered. That is the big thing, and it's taken a debt market. So dollar is having a surge against everything. So there's a dollar surge as well as this Korean won weakness, and I think I've said that a few times. So even against the yen, it's going up. Okay, guys, that's it. I'm going to turn in. It's 20 minutes past the midnight here, and I was up at about 4.5 hours of sleep and done a few airport runs and various other things. So I'm going to fall asleep on the job here. But I wanted to bring it out and say hi to you all and say Korean won is triggered. And this is going to be a dollar-based surge and the specific countries based weakness that is going to see it half is our call from when we've been getting into it, which is in the mid 1440s, 1442, 43. I think my earliest entries, I can check my trading platform because you guys can't see that, was 1410. Then it was 1415, 1420s, two 1420s, 1421, 1422, and then 26 through the 20s, and then added to the 40s. And I did put some additional runners at the 1450 that were added. So, yep, this could be a €1 million trade, a 50% move. Go on, smash it out the ballpark. Have fun, play safe, have stops. If you do anything, non-advice. Rate-based spike on a debt-based collapse because of a pending bankruptcy due to high interest rates being paid on a very large debt amount, making it unsustainable, likely to lead to a blow-off spike in the dollar, real damage that can do real damage to crypto and gold for a while before they suddenly revert violently back up once that spike is over. Okay, catch you all later. Thanks for jumping on the stream. Give it a like, give it a smash of a share to your pals and mates. Get them watching us. We will be continuing to update on the crypto markets on the other channel. So that Crypto Sniper YouTube. I really think everyone, including precious metals people, need to realize there's stuff crypto people need to realize, and there's stuff precious metals people need to realize. I tend to bash on the Bitcoin maximalist because I feel that the whole principle of that token was the least honest. I don't forgive XRP for being part of the surveillance system, but they never pretended to be anything else. They courted the central bankers. They went to the banks. They said, we're going to be the rails of a new system. And they set out to do that. Okay, I don't like you. I don't like your system, but you said what you are. The most dangerous thing is, you should hate on XRP. I'm your friend. I'm your freedom guy. I'm your own central bank in your pocket. I'm going to keep you private and safe, and then do none of those things and revert to Wall Street, Lowell Finkelstein, to being the big controller who has control using derivative proxy instruments like ETFs, for example, to dominate, have control, collect everybody's voting rights, control how these things are custodied, and no doubt weigh in on influence on mining pools and various other things, and tell me how purely decentralized you are, and how purely safe you are, and how you are the first version of a software and the best version, when I'm riding a modern car that drives a whole bunch better than a Model T Ford, and I have mountain bikes that are a whole bunch better than a penny farthing. But your first version item on a technologically based thing is the best. There's too much BS, there's too much belief, there's too much cultism with Bitcoin. But in some ways, sometimes in terms of how we speak as gold bugs, we've got to also be pragmatic, and we have some of the same elements, less so, more mature. You need to participate. You're not going to stop this digital system. They're going to implement it, and they're going to inflate the values. So you either watch it happen. I mean, if you ask me if I should have been more into Apple stock 2 decades ago, and Schmoogle and Nvidia and all of that, whether I'd be better off for it, trust me, I would be better off for it. I hated them. I knew what they were all about. I should have invested more in them. I missed the hold your nose trade. I'm not missing it again, because they ended up being multi-trillion market caps anyway. I didn't make them million trillion market caps by buying their stock, which unfortunately I didn't do. So they didn't not become them because I didn't. They went and did it anyway. So take the money, hate them and take the money, and then buy your freedom. They're going to bring that system. The people at the top are leading this agenda. They're going to attempt to bring it. So take the pumpermental money if you're smart enough, but recognize the high beta, balance it out with your gold, and don't over leverage and don't over leverage and don't over trade and hold for long terms and write it off and let it be amounts that you happy not to lose. Have more in gold than you have in crypto, so you have that stability, so you can be less volatile than all the guys that brag about being, I'm 100% in crypto, I'm 99% in crypto. I think it was Carl Moon who was bragging about how proud he was. I'm 99% in crypto. Okay, good for you. But when things go down, you have a very bad day. But if you've got gold and lots of paid for assets with no debt, that isn't the case. So yeah, a couple of key points for you all to bear in mind. Is he all in Sol? Ral, I thought he's all in Sui now. He's changing. Imagine getting rich on Fartcoin. I know it's embarrassing, actually. It's embarrassing. It's like, wow, come on. At least pretend to be something of value. Hey, Uruguay, glad to have you. Luis Suarez, legend. Yeah. Okay, guys, I'm going to let you go. Thank you very much. I'm going to go sleep. Catch you in the morning. Today is the day that USD triggered against the Korean won, part on dollar strength as a result of interest rates going up and a debt devaluation, in spite of Powell saying, no, our debt should be worth more. I'm cutting the rates. Okay. The market laughed at him, drove the 10-year through a falling wedge, capping descending grind line, triggering event, leading to debt devaluation, too much of it around. Reserve assets are being looked for, but first there's fear. Currencies go down when there's chronic debt devaluation, but sometimes afterward, not necessarily the one related with that debt. So as the debt in the America goes down, the dollar actually gets bid, but all the others battle and go down, and then eventually the dollar comes off too. As the debt stops going up in rates for a small while. So they're both contracting, but it's like a seesaw. It's like left foot, right foot, left foot, right foot. They're both going down, climbing down the ladder and getting lower in valuation, but they alternate in this. And we're having a spell of dollar strength, but that dollar strength could tumble into a mega spike surge on the basis of interest rates and debt collapse. So that is not a positive thing for America. Yes, your currency gets stronger, your debt devaluation takes place. It's going to obliterate pensions. It's going to obliterate your country's ability to borrow. Nobody is going to want to be a buyer. You're going to have to self-monetize. Your Fed is going to have to buy all your issued debt. They're going to tax extract on an epic level because they're going to be running out of income. They're going to have huge interest rate bills to pay and less money to spend on maintaining and running police forces, hospitals, airports, and everything else that they might have to do. So it is not a good thing, the fact that you might get a simple spell surge of strength in your currency. It'll just be utilized as a wrecking ball on everything else before falling apart itself. Okay, see you next time. Bye for now, and I hope that understanding has worked for you. And thank you to the 460 who came on, and especially the 255 that hit the like button of value given you. Have a great evening. Bye for now.